Well, the Lyft IPO is coming at the end of the week. It's expected to price its stock above the previously targeted range of between $62 and $68 a share. That happens tomorrow. It means the company would be valued at more than $23 billion. The share is expected to begin trading on Friday. Doug Flynn of Flynn Zito Capital Management joins us now with his perspective on IPOs. Doug, reportedly, the Lyft IPO is oversubscribed.
Yeah.
Why? Where's the profit? This is another unicorn looking to come to market.
Yeah, everybody's so familiar with both Lyft and Uber. I think that's where all the demand is. Everyone's excited about it because they get it. It makes sense. It's a business model they can understand. The problem is that Lyft alone lost about $1 billion last year. And actually, Lyft and Uber combined in the last 3 years have lost $15 billion. And so I'm just looking strictly at Lyft and saying, you know, Uber is 5 times the size of Lyft, and it isn't profitable. So even though Lyft touts all its growth rate that it has, and that's a good sign, where's the evidence of profitability? And they haven't explained it.
So should investors stay away? Because we're seeing a lot of IPOs about to come to market.
Yes.
Many of them are not profitable. Investors should stay away?
Well, you know, look, in the long term, a company has to be profitable to survive. But Amazon's a good look at how long they ran negative earnings and pro forma earnings. But here's the thing. Many IPOs come out, pop, and then 3 to 6 months later are below their IPO price. Take a look at Facebook as an example. So there's opportunities even if you don't catch the IPO. You do not want to chase something that you really can't put a number on fundamentally that makes any sense from a valuation perspective. And I can't really get the details to say, how is this going to become profitable in the long run?
Got it. Let's talk about Apple. They had a big announcement earlier this week, but 2 days of 1% losses. Would you buy Apple here?
Well, Apple, I mean, and below 200, I think it's okay. They have problems with the iPhone sales. This year, it's probably going to be down a little bit. Next year, maybe it stabilizes. But they have to shift to other businesses and create recurring revenue. And that's what they're doing. All of these new subscription-based services are all about recurring monthly revenue. That's the name of the game here. You can't keep selling things that people are buying less of. So I think they can figure it out, but they have a lot of work to do to shift to that type of a model. So I think it's not a great big buy here, but below 200, it's okay, I think. That's the way I look at it.
Do you forgive Apple in the sense that it seems that there's an industry problem of not having the next wow factor for hardware?
There definitely is. If you're not going to come out with the next big wow product, you have to do other things, and that's specifically what they're trying to do. And the name of the game in long-term business is all about recurring revenue. How do you create something that you can count on an ongoing basis? And that's where they're focusing because they know they don't really have any next great thing coming out.
There's a really cool story that I want to discuss with you really quickly, Doug,
Sure.
A gee-whiz type story. So UPS is now delivering medicine via drone.
Yes.
They're able to do so in 3 minutes instead of 30 minutes. They've beaten Amazon in getting this technology out, FedEx, Uber. Your thoughts?
Yeah, I think it's great. I think score one for UPS is the way I look at it. Everyone else has been talking about it. And that's the kind of company UPS is. They're doers. They're basically a bunch of people that work hard, and then they add the technology onto it, versus a technology-first company. They have a ton of technology, don't get me wrong, but they're really more about working things out, and that's what they've done here. So score one for them, and I think it's a great opportunity. That stock has got a lot of room for upside.
Yeah, looking at that chart, it sure does. Doug Flynn, thank you very much.
Thanks, Lauren.